And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today, and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome to another market update. My name is Jim Beach, School for Startups Radio, and I am joined, as always, with Dale Gillham of Wealth Within. You can find him at wealthwithin.us, and make sure you read his incredible book, Accelerate Your Wealth. It's your money, your choice. Dale, welcome to the show. Tough week. How you doing this week?
I'm fantastic, actually. It's quite interesting when you get weeks like this. I spent about 4 days in Queensland with some of my staff doing training and everything while the market was melting down. I think I hardly even looked at the market, which was quite interesting. And a lot of people think I should be busier in times like these, but that's the difference between having strategy and rules rather than acting emotionally, which I see what's happening at the moment.
Well, it is very emotional right now. People are scared and acting absolutely on impulse. Also, of course, Friday was the end of the month, and so no one wanted to be caught with a lot of stock over the weekend and at the end of the month, needed to close out some books. So let's ask the big question right off the bat. What are you expecting now that we've had a chance to recover and rest a little bit? What's going to happen Monday?
I would not be surprised if the Dow and the S&P bounced and actually went up this week, because I just think it's way oversold, the market at this point in time. You know, yeah, there's been a lot of fear mongering around the market, and obviously with the coronavirus and how big an effect it is going to have. And I think, you know, I know we've talked about it before, you know, everybody's walking around with all the information in their hot little hands, you know, with their iPhones and Androids, you know, all turning them into investment experts, but they're listening and looking at the wrong places. They really, really are, and it's creating that sort of reaction. But the big end of town love this. They absolutely love news like this because they create volatility. There's not a lot of, there's a lot of the big trading most of the big trading is happened by companies that are trying to get little percentage moves to make a lot of money, and they're making absolutely shed loads of money, S-H-E-D loads, not the other word, but they're making shed loads of money out of people's panic, and you don't really need to worry about it.
Well, in a minute, we're going to talk about the fact that this has happened quite a few times in the past, but before that, I want to point out that over the weekend, the news reflected other things. There were other things going on in the news. And Tuesday, just a few minutes after this video comes out, a few hours after this video comes out, we have a continuation of the elections. And I think that the other news will simply be more important, and Corona will be the second story or the third story of the day. And once it becomes the second or third story of the day, it's no longer a panic. And I kind of think that the stage will be set for the media to talk about something else for a minute. Does that make any sense?
Oh, it does. I mean, the coronavirus is another form of the flu, and obviously it does have a little bit more, the mortality rate's a bit higher than a normal flu, etc. But people, if they're careful and just, you know, wash their hands and, you know, put the antibacterial thing on and, you know, cough into your elbow, you got very, very small chance of actually catching it. But you find this news all of the time, and you know, as you mentioned the election, I was on the plane coming home from Queensland the other day from being with my staff, and as I said, I spent 4 days with my staff, but I was reading a book by a gentleman called W.D. Gann. You may have heard of him. He was one of America's best stock market experts back in the late 1800s, early 1900s, and I was reading this paragraph and he was talking about elections, and he was talking about scaremongering and big market declines during elections as if it was normal, and that the book I was reading was written in 1923. And he said, doesn't matter whether you're a Democrat or a Republican, it happens with both. And so to me, it's an election year, and the same thing is happening again. This sort of fake news keeps coming out to drive the market and drive public perception of what's going on in the politics and who's going to be the better president. I know there's a lot of speculation around Bernie Sanders that if he does get in as the president, that the market will crash. And according to this book in 1923, it doesn't matter who's in the market. If he does get in, the market will turn and bounce just like it did with Donald Trump. I mean, there was all of that news around Trump. I mean, Clinton or Hillary Clinton was, pushing out all this fake news, and there was a lot of speculation the market would crash after Trump got in. But look what happened after him. It just took off like a rocket, and the market's been bullish the last 4 years, and it hasn't been better. So, to me, it's all good news.
So let's put this in a larger perspective. In the 11 or so years since the global financial crisis, we've had 10% drops or thereabouts 7 times, I believe. So from a historical perspective, we've had drops every year and a half, every 2 years, and we've also had drops of 20% twice, I believe, during that time. Historically, the only thing about last week that's unusual, it seems to me, is the speed of the fall. How do I look? What about my thinking?
That's perfect, mate. I couldn't have said it any better myself, and it really is. Now, I know we've talked about it to the listeners quite a number of times, is the market is very cyclical. It will move up in random, regular cycles. It'll go from low to high to low over regular periods of time. That's what it does. It's very, very, very well known, the business cycle throughout the US and indeed the rest of the world. That we also have election cycles in the market, and we have bigger ones again. And the market will go from low to high to low every single year. When it does, it'll fall 8 to 12%, which is where all of these times, it's those 6 times prior to last week. So now it's 7 times in 11 years that the market has fallen at least 10%. And as I said, you're right, there's 20% falls on a couple of occasions, the last one being December 2018. But the S&P is just doing what it normally does, or the Dow's doing what it normally does. But when you look at the S&P, it's 7 times it's fallen over 10% since 2009. It's fallen more than the Dow, but the largest being 21.3% in October 2011, and then 20.2% into December 2018. So what the market's doing right now, to me, is it unusual? And I agree with you, it's just the speed. That's all it is the speed, not the amount and when it's doing it. Like we've been chatting for ages that the market will start to fall into a low sometime in this first part of 2020 and then go bullish. But I also remember chatting to you about the market won't do the same returns as it did in 2019. It won't do that 25, 26%. This is the reason why it won't do that big return. But I think it'll stabilise soon and then start to take off, and we'll go Corona who? That'll be about it.
All right, so explain to me, is there any inherent reason that speed is important, or is it just another media angle? I don't understand why the speed inherent of itself is so critical. Doesn't that mean the market will go back up really fast too?
Well, it can. That's what I'm saying. It would not surprise me one bit that if the market just turned and took off this week once on market open on Monday, I wouldn't be surprised at all if I saw the market pull back, 50% or even more of what it fell last week. It's not unusual. I mean, we've had big falls like this in a very short space of time. Obviously, we had the GFC. We had some big falls during that on one day. We've had the 1987 crash where that was all over in a matter of months, that whole crash where the Dow, I think, fell 50% during that time, and that was a crash. If you go back to 1929 and look at the movements in 1929, whilst the Dow bottomed in 32, you saw huge falls in the early part, massive falls over a day. You saw massive big falls in one day. But we're not at that stage at the moment. The market is looking really good. It's about the mood of the market and market psychology. And we've got short-term emotions running the market. The big end of town are profiting from that. But realistically, humans adjust, and if we can't take goods and services from China, America's going to be making them for themselves, because you still need food, you still need all sorts of services, you still need products. So if we can't get it from China over a longer run, we'll find somewhere else to get it from. It's pretty much as simple as that. But right now I think everything is short term. The market will move up to being bullish shortly again.
And what about the restoration of the supply chain? So I actually went to Costco today to buy some stuff, but also to get the mood. And the teller or the cashier checkout person was actually joking about how many people were buying water. And I was like, what are they going to do with water for the coronavirus? Why? It's not a hurricane that's coming, so I didn't get that. But Costco was selling water like crazy, but the mood was not one of panic. The mood was not one of shortage. The mood was not one of desperation. People were still in there buying stuff for their pets and party supplies and things like that. However, we do see the shortages in Hawaii. We're seeing the beginning of that on the West Coast. What do you think about the supply chain in the next month or so? Are we going to have supply chain of Apple restored and other products that will actually affect the economy and kill the GDP?
Well, I think when you're talking about a couple of different things, there's people that are stockpiling food and everything else in case they have to, like if the children stay home from school, because that does happen sometimes when you get these sort of pandemics. They might close the schools for 1 to 2 weeks. I think the longest I've seen the US schools closed for, I think it's maybe 3 weeks or close to that on something like this. So people are. But
that was probably for a strike. That was the teachers on strike, Dale.
Oh well, maybe they were feigning there was a fake sickness where we don't want to work, so let's stay off for 3 weeks. But generally, it's only a couple of weeks the schools are closed, and obviously, if you've got your kids home and you're not going out, then stockpiling some food and basic staples and everything is fine. But there are a smaller percentage of people that are doing that right now. The other sort of side of the coin is outside of food and basic necessities, is really that supply chain into in some of those companies like your Apple, which pretty much everything that Apple makes is in China. They design it in the US and it's made in China. And obviously you've got all of the other different products, all the screens, the TVs come from China. So retail will get affected by a shortage of supply, but it also might push prices up too, because of the scarcity there of getting products. There won't be as many discounts. If you need it, it'll be a little bit more higher prices. But I wouldn't suggest that once China sorts it out a little bit and they get back into their factories, I think the supply will go up pretty fast, because China's just like us. Whilst it's a communist nation, it's more of it is capitalistic very much as well, and companies do want to make money. Employees do need to get wages so they can live, and they're not going to want to stay off for too long. So they will adapt, whether they're all wearing masks or how they're doing it, just to get back into those factories. So again, I don't think it's going to be for too long that the factories will close. The supply chains will take a few months to get back up to speed again. But that's what I'm saying, it's a bit more short term. But there are companies benefiting from this as well. Just find those.
Very good point. All right, so let's start to wrap it up. Prediction for the week, volatility a little bit up. What are your thoughts?
Look, I've got one of those gut feelings, and I know I can't trade on a gut feeling. I've got to trade on fact, and fact tells me the market should fall away for another couple of weeks, but it won't be as big a fall. But my gut feeling is we'll see a bounce this week, and it'll move up, and it'll be less of a panic and much more of an easing of the market and a steadying of the market. That's why I always say to people, always look at the big picture. Don't look at 1 day or 1 week, because 1 day or 1 week doesn't make you a millionaire. It's very much when you look at it and the bigger picture over 5 and 10 years, you really do start to see the reality. So we might be talking next week and the market might be up several hundred points.
Could be up a couple thousand points next week, or the opposite. We'll see. I have a feeling, my prediction, my gut, and I'm not a professional trader, so I'm allowed to trade on my gut. My gut is that the news Monday will be about the coronavirus. The news on Tuesday and Wednesday will be about the election, Super Tuesday. And because of that, when we hear about it again on Thursday, it will be old hat. We won't be really worrying. Oh, we've heard about that. That's baked in. It's baked in. And from then on, we'll ride it on out. And it will be something that's just part of American life again. So
Well,
anyway.
it will be. It definitely will be. But hey, mate, Tesla's gone down last week, so maybe time for you to look at it.
Yes. And we didn't talk about Twitter, another one of my favorite companies to badmouth. I have never been a Twitter fan. I just don't understand the profit margin there. I've never once clicked on a Twitter ad that I've seen. I don't know. I don't think Jack Dorsey's done a particularly good job. And the news this morning is that one of the Republican super donors has bought enough to kick Jack Dorsey out. What are your thoughts on the Twitter news?
Well, I hadn't heard that, but
I'm sorry.
But I'm actually with you, mate. I don't understand Twitter. Maybe it's my age, but it's beyond me. But I'll have a good look at the stock, and we can chat about it next week.
Well, it'll be interesting. It could be taken over and Dorsey out the door by then. But the early news here in America is that a Republican super donor, and I don't remember his name, I'd never heard of him before, has bought enough of Twitter to take it over. So,
well, there you go.
Heard it here first.
Fantastic.
Dale, have a great week. Thank you so very much. Again, go to wealthwithin.us to learn more. And the book is Accelerate Your Wealth. Learn some more. I'm learning so much every week. Dale, thanks a lot. You have a great week, and we'll talk to you next week.
Take care, Jim.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, as you heard in my interview with Jim Beach last week, was a pretty interesting, wild ride for most people on the US stock market, with both the Dow and the S&P falling really, really heavily based on all that market news and panic in the market around coronavirus fears. And as Jim said, to me, or to him, it really was, he was thinking, well, the news will sort of go into the background in the not too distant future. And I know the US had its first case, or first mortality or death from the coronavirus in the past few days. I think there's only 25 cases of coronavirus in the US at the moment, and I think, as I was saying with Jim, I think what we're going to do is it will sort of shrink away. We'll learn how to adapt and everything else, and things will get onto normal in the not too distant future. But it was a wild ride on the market last week. But let's have a quick look at the chart just to see what's going on. Now, on your screen is my normal chart that I have. It's a weekly chart, which is the one that I've been showing you for quite some time. And interesting here, that long grey line there, which is, if you go back to last week's recording or last few weeks, you'll see that line's been there the whole time. Haven't moved it. You can see it hasn't. Well, you can actually check to make sure it hasn't moved. It's just fallen down to that line, and it fell right just below it. But now the close is right up there. If I show you there, you can see it fell just below it and it closed up. So I wouldn't be surprised if the market comes right back up into this sort of 26,000 point area, and it really wouldn't surprise me at all. If looking at the bar from last week, it wouldn't surprise me if it got up around this halfway mark here, maybe even higher this week as it does bounce. But where's it heading? I still think it's bullish, more longer term bullish. But you can see this move here. If I put my pointer on, this is what Jim was talking about, how many times the market's falling. This was back to December 2018, it just fell faster. So that was 19.2%, or what I was saying was 19.2% fall. Currently the fall here, if we go to the same tool, you can see here to fall to that level was 16%. So it's not even as big a fall. It just happened over a quicker time. Now, I did say one time, not too distant future, a little while ago, the more it went up at this point in time, the faster it would come down. I just didn't expect it this far. Right now, I don't know whether the market's had its low yet. how much further it's got to go, but I wouldn't suggest it's going to travel too much further. It could go 15 to 20%, about right now it's about 16% from that high, so it could go around another 4%, maybe another 5%. I doubt whether it's going to go any further, because once it gets over 25, you're into crash territory, whereas 20% is bear market. And by the time they start calling the bear market, it's all over. So again, I think most of the moves already happened. There might be a little bit of a bounce up this week, and it could, again, start to fall away a little bit more. But it wouldn't surprise me if this is the low. It really would not surprise me, although I am prepared for further falls. That's what you need to do. Prepare for further falls in case they do happen. Always look at stop losses and have those on your stocks. But again, nothing to be worrying about. It's doing normal things that the market does. But as Jim and I said, it was just the speed that's different rather than anything else. So let's get into the questions that we've got. Now, I know we do have one for this week. And the question we've got is from Riley, who says, "Hi Dale, what's your opinion on Abbott Laboratories?" Or A, B for Bob, T for Tom, stock ticker code. Thanks, Rye. Now, looking at this, you can see here, it's just fallen away this past week. You can see here this one, if I bring up on a weekly chart. Outside of that, it looks really, really good, Riley. So I almost forgot your name there, matey. It has fallen about 19.9% from that high back in January there. We had a little bit of indecision through, then it dropping through here, but right now staying out of it. But looking at that, there's a beautiful bullish type of stock, just having its normal cycle low, or what I would call a cycle low. If I keep going back, you can see here how it has falls through here. There's some falls over there, and if I can keep going back, you'll see lots more falls. So what's happening now is not unusual. Right now, if you don't own it, I wouldn't be buying it. I'd just be sitting back waiting for it to find some support, and then possibly look for that support and start taking it up from there. But it's probably a bit overdue for a pullback anyway. So at this point in time, nice looking stock outside at the moment. Just sit back, sit on your hands and wait for the dust to settle, mate. And then you might look at coming into a stock like this. Now, what I also want to do, that was the question that we've had for this week. If you do have questions, send them through. But I would like to have a look at a couple of stocks. Now, I know I've talked about in the past some of the chip manufacturers like NVIDIA. So I did want to have a look at that. So NVIDIA, Qualcomm, I can't remember some of the other ones. Now they've just gone from my head. But looking at that, saying I do like those stocks. Now looking at NVIDIA, you can see here the chart of NVIDIA. It is really different than some of the other stocks that you might look at right now. It has been very, very bullish right through. It's been bullish since this August 2019. It's done very, very well since then. And as I said, most of the stocks in this sort of area have done very, very well. But from there to there, you can see it's 114% in the last 6 months. Right now, a little bit of indecision 2 weeks ago, but this is an interesting bar. It opened, pushed down, came right back, and it closed where it opened. That says to me that the market is not suggesting this stock is a bearish stock. It's just been hit a little bit by the market or overreaction on the market. So again, have a look at that. But if we do look at that weekly chart, you can see it's just come back. If I put a trend line on here, you'll see it's just come back to that sort of normal angle like I was talking about with the Dow just a few seconds ago. It's just come back to that nice angle. It did blow off on it for a bit. It's come back to that angle, and I would suggest it was going to keep going along there. So there are stocks out there, even though the market is very, very nervous at this point in time. There is a lot of emotional selling at this point in time. Cool heads will prevail, and what the best thing for you to do right now is to really just look at stocks that are good stocks that may have been hit a little bit. I'm going to look at a couple of others. Here's one, here's called Guild. This one actually was one of the better performers last week, and you can see here last week. You can see this stock here gapped right up on Monday, traded up and came back and closed almost where it closed on the week before. But up till this point, it was more of a bearish stock going sideways. So I'd look at this one, and if it is really finding some support here, this could be good because it was going counter trend or counter cyclical to what the market was doing. Market's very bearish. This was quite bullish. It did end up for the week a little bit lower in a bearish market, but only just lower. I want to look at a couple of other ones. Another one's called Salesforce. Again, this one's been a beautiful stock. And you can see up until last week, it's done very, very, very well. It's been a very bullish stock. I would suggest it's not going to stop doing that. Other than last week, it has been a really nice stock. It did come down into December 2018 like the rest of the market, but again, after this little move here, if you can see, if I can put my trend line on it, you can see here it's probably come back to that sort of what's normal for this. It may come back a little bit more this week, but again, another nice looking stock. So it's not all doom and gloom. Adobe, another one that's been beautifully bullish all the way through here. Just one little week down at this point in time, but still looking quite nice. I'm not going to suggest Adobe may not come back a little bit more. It may do that, but when you're looking at this, great looking stock. So there are plenty of good looking stocks, nothing to be panicking about. There are plenty out there, and Microsoft, one of the best stocks in the last year or so. Have a look at that left-hand side of the chart. And this is really what I was talking about with Jim, is look bigger picture. Don't look over a small period of over days or a week. You know, a week doesn't make you a millionaire, or doesn't lose you $1 million generally. But Microsoft is still looking good, and I haven't brought up Apple. I did look at that last week, but this week it does look, this stock looks really, really nice. So again, don't panic. Just look at your stocks, and if you've got good stocks, they won't fall as much, and they'll bounce pretty hard. They'll bounce pretty hard back up again if you do have good stocks. Right now, I just think it's a lot of market manipulation going on by the big end of town, and a lot of the brokers taking a lot of money out of the market, creating that volatility. And as Jim said, you know, once the news, the coronavirus gets onto, you know, the second or third story, then the market will settle down, everything will be nice again, and we'll be talking about how bullish the market is. So, but thanks for sending in all of your questions, and really, thanks for watching till the end of this video. I do appreciate that. As always, if you want to ask a question, just stick them down below in the chat and I will answer them for you. So please do that. Get typing. Now, remember, I do these reports every single week with Jim, so they get put out on Monday morning in the US. Also, remember to hit the subscribe button and the bell on the right of it so you know when we do upload these reports. But that's it for this week. I'm Dale Gillham. Goodbye, good luck, and good trading.